Good morning, everybody. Welcome back to the Opportunistic Trader. It is September 27th at 10 a.m. And, last minute, Phil Flynn, we're joined by of the Price Futures Group and Fox Business. He was able to help us out last minute. Come on, talk to us about the markets. Welcome, Phil. How's it going?
Hey, it's a good day. Very exciting day in oil, in the global economy, U.S. economy, 4% plus GDP. I thought that wasn't supposed to happen. That's impossible. It's got to be impossible. They're going to have to redo that number because I was told it was impossible a couple of years ago. Wait, it happened. Wait, how did that happen? I don't know.
Yeah,
Mike, how did that happen?
we've been seeing some good numbers, and I think that's reflected in the yields. I mean, we've got the 2-year above 2.8%. We got the 10-year above 3%. The Fed yesterday raised rates,
Mm-hmm.
we are seeing that sort of data, good data.
Yeah, and it was kind of fun because I was breaking the Fed announcement live for Sky News in Australia. I don't know what time in the morning they were watching me. It's got to be, it's got to be either tomorrow or early morning. And it was kind of interesting because in a weird way, the Fed announcement, it was a historic day. In the evolution of the financial crisis, and I do think it is a big deal that the Fed removed the term accommodative from the statement. Even though Jerome Powell came out later and say, yeah, well, we're still accommodative, we're just not putting it in the statement. But it definitely, from a forward-looking standpoint, is a major turning point in the economic crisis. To getting back to a more normal interest rate shows the economy is healed. And by the Fed raising their economic growth forecast, not only for this year, but for next year and the year after, really bodes well for the stock market. I think it bodes well for the commodity markets and the oil market.
Yeah, well, it's interesting. Commodity markets are mixed. It's energy markets have been crude is up significantly for the year, but a lot of other markets are down. So it's
Yeah, it's been a dollar issue. And one of the things we've got going on today that's slowing down the oil and some of the other commodities is the dollar's on fire again. And I think it accelerated after the strong GDP. The dollar was somewhat sanguine yesterday after the Fed raised interest rates because it was expected. And the stock market rallied initially after the announcement. Um, on the expected growth. But then when we got the strong durable goods numbers this morning, better than expected, GDP, uh, pretty much in line with expectations, but still an incredible number. The market's saying, well, maybe the Fed is going to have to be more aggressive, right? They're talking about one more rate hike this year, probably in December, three more next year. But after the strong data this morning, they might want to increase the dot plot one more time, another interest rate increase next year. And I think that's why the dollar really is strong today. And that dollar, of course, is just weighing on commodities just a hair.
Yeah, well, I guess like you mentioned, the dollar story has weighed on commodities, and the one I guess big takeaway from yesterday's press conference as well is that Fed Chair Powell really made it sound like he is data dependent. They give their longer term estimates of a year out, 2 years out, 3 years out, but they are going to react with the data. At least that's what he's saying. So, yeah.
Right, right. I think Fed chairmen say that in their sleep. It's like, how did you sleep last night? I'm reacting to the data. I'm, like, I'm going to react. I react good. I don't. No, I agree with you. And I think they will. I mean, if the market starts to heat up, I think they will get more aggressive. And it seems like there's not a lot of dissent in the Federal Reserve right now. I think they all realize they've got a good thing going. But he also said that. That he still wants to see the economy grow because the lower income part of the economy, they still have to get the full benefits of the economic growth. So it's funny that he says that because if you look at the low end of the spectrum, they're still doing better than they have in the last 15, 20 years. We're seeing black unemployment at historic lows, Hispanic unemployment at historic lows, wages starting to move up a little bit. But I think it's encouraging that he wants to see more, that he is willing to allow the economy to grow. So the recovery, helps not only the rich, but those at the lower end of the spectrum.
Yeah. I also wanted to point out right now the Kavanaugh hearing is getting underway shortly, so that's going to be something
The
that
volume
kind
just
of,
dried up. No volume. No
yeah,
volume
people's
now.
eyeballs are going to move to that screen for sure. It's a
There
hot
you go.
topic. Probably not so much market moving, but other than, like you said, some volume like that.
Correct.
And then the other thing I wanted to get to was, what was your take on the energy reaction? Here we are, crude's at 71.70, 71.75 ish right now. I'm sorry, 71.86. We had the API, the DOE. Any thoughts? Now that we are a day later from all that data.
Well, we're definitely in maintenance season, and we saw a huge drop in the refinery runs yesterday, biggest drop in a long time. So refining maintenance season is here. And initially that slowed down the momentum on oil yesterday because the market was on fire. I mean, we're in a very tight market situation. We're going to have Iranian sanctions coming up in November, and the market was very positive on that, very bullish. But then they thought, hey, wait a second, the refiners are now going into maintenance. We saw a huge drop in refining activity by 4 percentage points plus. We saw refinery runs fall dramatically. And so the market was saying, well, hey, I know sanctions are coming, but we still have a little time, and the refiners aren't going to be running as much crude, so we can build up supplies. And besides, we know at the end of the day, the Trump administration is going to release oil from the Strategic Petroleum Reserve. Breaking news, bump, bump, bump. Energy Secretary Rick Perry late in the day came out and says, no, that the Trump administration is not going to release oil from the SPR to replace the lost Iranian barrels, which, by the way, is the right move. I really believe that. I'm a big market guy, free market guy. And one of the problems that you have when the government starts to intervene in releasing oil from the SPR to cool down prices when you don't have a real situation with supply, in a tight market, it can actually do more damage. Because what happens is the SPR all of a sudden releases a lot of oil on the reserve. They don't have enough to do it over the long term, and you get this sugar low on a sugar crash in the price of oil. And when the price sells off, the people that have been actively trying to raise production to meet that get hurt economically. Okay, so the producers, like for example, was a Pioneer, one of the pipeline companies, had a pipeline that they were trying to get done over the next couple of months. They fast forwarded the project by 6 months, put a lot of money into it to get money out of the Permian Basin for the sole purpose of supplying the market with oil from the Permian Basin, where we've had pipeline constraints. So they're spending a lot of money to bring oil to the market to meet that demand. And it wouldn't be fair to them if the government's, crashed the prices, right when they spent all this money to bring this new supply in the market. So that's a perfect example of why it may hurt. The other thing is that the other side of this equation, besides the Iranian sanctions that are bringing up the price of oil, is strong demand. The U.S. economy, 4.2% growth. You know how much oil it takes to get 4.2 or 4.4 growth? It's an incredible amount of oil. So you have the demand side of the equation. If we artificially
hang on one second, question for you.
Yeah,
The demand side, are you saying that the demand side has actually increased in the U.S. in the past year?
It has. Absolutely, it has.
I
We
only
have
asked
seen
because
demand.
I think we were speaking with Andy LeBeau yesterday, and he said that it's kind of roughly flat. I think from the data side.
Well, according to the Energy Information Administration yesterday, we had the demand numbers right here. And if you look on the demand side, over the last 4 weeks, we're averaging 20.8 million barrels a day on total product supplies. That's actually up 2.6% over the same period a year ago. So 20.8 million barrels a day of total product supply. So
okay.
if you
he
look
might have
at
been
the
looking
total
at a different
supplies,
number.
yeah, he might have been looking at gasoline demand. And if you look at the 4-week moving average on gasoline demand, let's see where we had that here. I think I had it right in front of me, actually. If you look at over the past 4 weeks, crude oil imports, that's not what I'm looking for. Here we go. Distillate demand over the last 4 weeks was down 0.7% from the same period a year ago. So we're flat on distillate demand, but on the jet fuel side, we're actually 4% higher than we were a year ago. Okay?
Yeah, I know that we've spoken actually about
Yeah.
a number of times. We've seen some headlines, some Wall Street Journal articles that we've spoken
Yeah.
about actually people starting to adjust, airlines getting a little
Yeah. Yeah.
uneasy about these levels, cutting back,
Right.
making adjustments, things of that nature. And
Yeah. So I mean, I guess 2.6% when you're running 20 million barrels of product, or you're supplying 20.8 million barrels of oil at this time of year. That's a pretty incredibly strong number. Now he might be talking about demand growth. Some people are looking, the type of demand growth that we had from 2014 to 15 to 16 to 17. I mean, that was incredible, right? But you got to remember we were coming from a low area. So I guess what Andy might be saying is, hey, we're not seeing the type of demand growth we saw a year ago. But if you look at it cumulatively from where we were, 4 years ago, it's incredible growth. And it's with a bullet. Okay. And that's what you got to remember. It's not only when you're talking about futures market, it's not what it is just today. It's what's it going to be 3 months from now, 6 months from now. If you look at the stock market, for example, as a forward indicator of energy demand, which it is, right? Because it signals the economy. It's looking ahead in the economy. And we're breaking records on the stock market. What's that going to mean for energy demand? It means it's going to go up, right?
Sure. No, that makes sense.
If you look at gasoline demand in the US, yeah, it's kind of flattened out on miles driven. And some people are saying, oh my gosh, based on miles driven, the American drivers are reflecting higher gasoline prices and they're driving less. But the counter argument to that is that could be temporary, because if you look at what kind of cars people have been buying here, have you looked at the sales at the big auto companies? They're not buying small cars. They're buying SUVs. They're buying larger cars. And even though they're more fuel efficient, that's going to raise the demand as well.
Yeah.
So, that's why one of the reasons the demand growth is one of the reasons we keep our long-term bullish outlook, and we don't see that demand going away anytime soon.
Yeah, interesting. So, off topic, but I wanted to just point out at 10 o'clock, pending home sales came out, and they were weaker. They were down 1.8 versus down 0.5. Year over year was weaker, month over month. Kind of all the numbers were a bit weaker. And this is something we were speaking yesterday with Tony Greer about, and actually looking at some of these home builders that continue to underperform. I see Toll, Pulte both down and making new 52-week lows. Actually, that's not a 52-week low, but multi-week lows pretty much on the 52-week low. So that's really an interesting dynamic there. Yields haven't really reacted a whole lot from that. Yields are pretty flat on the day here. But just wanted to point that out. That was pending home sales at 10 o'clock. So home builders and the housing market is possibly reacting to the higher prices, higher yields, I should say, in the U.S. and definitely underperforming. One thing I wanted to ask you, Phil, you speak to a lot of traders all day long. What are some big trades out there? What are people? Where's the conviction right now? Where are people exposed?
Well, the one that we have liked that's been off the radar, I thought I mentioned it a few weeks ago. I don't remember if I did. Here has been the palladium market, and that market has really been taken off as of late. Theoretically, with the economy doing as well, and if we don't see as big of a fallback from the trade war as people think, we're going to be into a shortage of palladium over the next couple months. Interestingly enough, its sister metal, the platinum, has been struggling here a little bit. So you want to be long palladium, short platinum as a spread. So that's, to me, is a forward leading indicator. You mentioned the home sales. We had a big sell-off in lumber. Of course, earlier in the year, we had the big run-up in lumber, first on the trade spat with Canada, later on strong home sales, and then market tank. We may have hit bottom on lumber as well. And you're right. You did pick the one part of the economy that has been softening a little bit, the housing market a bit. And that's something that we definitely want to watch as a possible warning sign. But it doesn't really coincide with the other data that we're seeing from how people feel about the economy, with consumer confidence doing well, people feeling better about their job prospects. we know with housing, some of it has been inventory, but being a bit of a problem. Some of it has been pricing because prices have been really high. So, you know, we have to respect the housing market because of the 2008 crisis. Something to watch,
Yeah,
but
I
you
agree. I
really
spoke to Tony
pick one of
Greer.
the weak part. Yeah,
Yeah, well, I spoke to Tony Greer yesterday about this because the
yeah.
exact thing that you're pointing out. We have seen higher data points. The economy is doing well, which typically means people are more confident with their job, things of that nature, and they're willing to buy a home. But his point against it was saying that the economy is strong. It's just more of a reaction to higher rates, more so than anything.
It could be, but that usually is a double-edged sword because then people that are looking for a home say, "Oh, I'm going to wait for rates to go back down," and then when they start to realize they're probably not, all of a sudden these rates look cheap. Heck, when I bought my home, I wish I could have got these interest rates, right? Originally, I had to refinance quite a bit on the way down. So definitely something to keep an eye on. Getting back to the big picture on oil again too, it's kind of interesting too. You know, a lot of people had a lot of misconceptions about how the shale oil market was going to keep prices low forever. Okay. You had all these guys talking, a year ago that we wouldn't see oil above $40 or $50 ever again because shale oil. I think one thing we should know, guess what? Shale oil production hit an all time record high yesterday, or U.S. oil production, which was pretty amazing.
So you're
Um,
saying that shale oil production's at the highest level that we've seen?
That's what we were reported yesterday at 11, or U.S. oil production, partly driven by shale, obviously, was over 11 million barrels yesterday. So that was a record high. So we are starting to see, obviously, that impact. But the funny part about this story that people were missing that thought shale oil production was going to be the savior of the market and keep oil prices below $40 forever or $50 forever, they failed to take into account declining global production in other places, right? Because everybody was saying a couple of years ago, hey, look at this oil, man, it's going to be cheap forever. Well, if it's going to be cheap forever, and ExxonMobil's telling me prices are going to be lower for longer, we're not going to invest in projects because of shale oil. How many barrels of oil have we already lost because of that? And I think that's what's showing up. Everybody thought that we'd have this oil glut forever. The oil glut is gone, and that's why we're seeing this incredible move in the energies.
Yeah, it has been an incredible move over the past decade. If you really look at it, we've seen some really big moves in the energy market, and the psychology that goes along with it when it's at the low level, when it's at the high level. We're never going to see this. We're never going to see that. It's been,
Mm-hmm.
remarkable moves.
It has been, absolutely has been. Now, if you look at
So
oil,
what are you
if,
thinking? What anything that's going to move the market over the next, into the weekend, basically, into the weekend?
um, that's a good thought. Let me think here a little bit. We've got for
Anything
oil, of course, we've got
geopolitical
the
or?
rig counts. Well, geopolitical is definitely an issue right now. We've got the bulk of the economic data out today, so that's pretty much in. We've got the thing. So as I look into next week for oil, it's going to be the rig count. It's going to be looking at the dollar today, looking at the stock market, and but as you pointed out, everybody has their eyes on these Kavanaugh hearings, and that's kind of the show of the day. So, if you like that kind of, this is, that kind of titillation that may take some volume away from the market because everybody's watching it. I haven't seen this many traders watching the TV since the Cubs were in the World Series, so it's been a while.
It's interesting. Yeah, well, that's I think getting underway right now. As you said, it'll definitely be a talk. Even the president yesterday said he was canceling meetings. He wanted to keep a close eye on it. So, we'll definitely keep an eye on it here. We'll see what happens. But Phil, thanks for joining us last minute. I appreciate it. Have a good rest of the day.
You too. Thank you so much.
All right.
Bye-bye.
That was Phil Flynn of the Price Group and also Fox Business Contributor. Thank you.